G'day all, Ben here, East West. Now I realise my last video might have been a little bit bearish, and that's because I was coming at this from a trading perspective, but I do appreciate the fact that a lot of people who might look at my videos are not traders, they are long-term investors. So let me just start by putting on some soft music just to calm us all down. Very nice. And now let's just transition into some nice, calm videos to watch while we talk about this for a moment. So, look, the one thing is it's always darkest before the dawn. So what we need to consider here is I understand that right now it does look very, very dark, but the sun will rise. That is guaranteed. We just don't know exactly when. However, if you are a long-term investor, and this is who this video is aimed at, start celebrating. You know why? It's Christmas. This week is Christmas for long-term uranium investors. Okay? It's on sale. The market is now officially on sale. So before we get going, a few things to note here. This is not investment advice. You need to make your own decisions in regards to how you manage your own money. I've made this video more for long-term uranium investors who may be looking for a good place to start to enter the market and have a very strong belief in the underlying fundamentals of the uranium thesis, uranium squeeze, the uranium shortage, call it what you will. But most importantly, anything you do in the uranium market from here on in, you have to be prepared to wear further losses. I can't stress that heavily enough. There's definitely a chance this market could move a lot lower than where it is right now, and it could happen extremely quickly. So if that sounds like you've got a big pile of cash burning a hole in your pocket and you don't mind watching that cash burn on a bonfire, well, let's just jump in and have a look, because maybe the market's offering us some pretty good entries. So let's start off here looking at URA. We're only going to stick to the weekly timeframes. We're not going to go any lower than that because this is a big overview video. Now, what has effectively happened here, and this will be the recurring theme throughout all these names that we look at. When we think about the rally from the COVID low, from January 2022 all the way through to, well, let's call this May 2023. So that is a long stretch of time, but the market was on sale 50%. It was 50% off. Now, you had to wear some dead money here, because for sure that the market hasn't rallied, and there would have been certainly other investments that would have seriously outperformed this. So yes, you are locked into uranium here, but the market was on sale 50%. So what's happening now? The market is once again on sale. It's 50% off. If you're a long-term investor, okay, and I've got to quantify or qualify what I'm saying here. This is not about trading. This is aimed for people who are long-term investors, who have a fundamental belief in the thesis and the fundamentals of the market, and are simply looking for an entry. If that's you, well, the market's on sale 50% right now. It's 50% off. But here's the very important part. I'm not offering advice or anything like that, but I would suggest that what you need to do, this is a case of expecting the best, but preparing for the worst. And for me, the worst case scenario, I would be looking at that. Okay, so I would be looking at, if I was going to be a buyer here somewhere next week, and I'm not saying that that's what you should do, you've got to do whatever you want, but I would suggest that if you're a long-term investor, if you want to be a buyer here, I'd just be prepared to wear it down here. Okay, I'd be prepared to, you've got to be able to withstand it down here. And I'm not saying it will get down here, but you've got to have sort of a battle plan in your head that it can get down here and you're not going to puke out of it. Okay, so I know for a lot of people, look, if you want to put your money in here and you're happy to watch the whole lot burn, well, that's your choice. If that is you, if you're like, no man, I can put my 100k in here, I can watch it burn, I don't care, I believe, well, this is a good spot to enter on a long-term basis. But as you know, again, word of warning, Not impossible that happens. You cannot discount it, okay, regardless. We just don't know how far this market shakeout is going to go. But hey, look, it might end next week. These stocks might be a lot higher by next Friday. We don't know, but this can happen for sure. Don't discount that. So as long as you're happy to see that happen, and as long as you're prepared to wear that drawdown, well, the market is on sale. I think it's obvious to say that this would be the better entry if you could get it. But being able to hold your nerve to see if the market will get down here, that's a whole nother story, because it may not get that far. Okay, like I said, maybe Friday was the shakeout. We don't know that. Maybe next week it starts going again. Okay, we'll just have to. I'm not sure that will happen. I just think overall the market, it hasn't found its feet yet, but this could certainly happen. And if it does, long term, this is a good spot. And so even technically coming in here and looking at this, okay, look, you've got all these tops coming in here, right? And we're just sitting on the edge there, right? So there is structural support there. Okay, we had a little bottom here, and we're just coming into this zone. And if we come across here, broadly speaking, we are in an area, okay, right in here of no market acceptance in terms of volume. This is a volume profile for basically the entire visible range. Okay, so this is, I only really take this stuff off the bottom of COVID because I think the market before then hadn't really got going, and what we're dealing with is the dynamics since the COVID low. Okay, so we've got an area here through here of no market acceptance. Okay, and that's what we've just fallen back into. Plus, we've got a little bit of this here. So, technically on the big picture, this is not a bad zone. Okay, but I don't know if it's going to hold. I mean, it could easily crack further. That's what I think you've just got to be prepared for. But hey, like I said, if you don't care about that and you're looking for an on-ramp, well, this isn't a bad one. This will look pretty much the same across a lot of them. Okay, here's the double tops in Denison. Okay, now we did get through and test back down, so maybe you could widen that out to there, but look what that encompasses, the 61.8. Okay, not so much of the volume here, but like I said, word of warning, I would be prepared to wear it all the way down and test this. Okay, with all of these, I'll be prepared to wear it, and you know what, it could get there and go further. I wouldn't discount that happening. I don't think it will, but I don't know. I didn't think this would happen either. Okay, CCJ, same sort of thing happening here, right? It's on sale, but you've got to be prepared to wear it a little bit further. And look, this is the thing. Look where this 50 comes in. Okay, there's not a lot. The volume profile is probably not helping us a huge amount until we get down here, because the volume gets a bit thin up through the 2023 rally when you talk about it overall. Just expand that out. But look where that comes in. I mean, that just above that 50, that's where it all lines up. But you've got to be prepared to, if you want to buy it today, it's on sale. It's on sale, in regards to 2023 prices. But if you want it on sale from the COVID low, that looks like a pretty good shot. Now, I'm just going to bring up something here slightly off the charts for a moment. Now, I've just worked out the maximum drawdowns of each year. Since 2000, like I said, the data going back then, how much do we pay attention to it? But when you look at this, even coming in here, 31%, this is a pretty healthy pullback, a pretty healthy drawdown from the peak. And when we look at this bar chart, right, we're sitting just above what you could say is the average drawdown each year for CCJ. Okay, so we might have a little bit to go. Okay, so the average drawdown here, when you take in all the drawdowns of the maximum drawdowns since year 2000, is about 35%. Right now we're sitting down about 31.5%. So there might be a little bit more to go. Okay, but you can see a lot of these years it did get down here. Okay, so I wouldn't have said anything's out of the norm just yet. You probably maybe do a trim mean, and that we'll do a trim mean, take out some of the bigger down days and just look at the averages, and I think you'd still find we're around about 30%. So this sort of washout is not hugely out of the ordinary, But word of warning, just because the average is 35, just because we're sitting down 31, doesn't mean we can't have a 72% drawdown like we did in 2008. It could happen. I don't know. I'm just looking back at history, okay, and seeing what I can see. So back here on the charts, I mean, think about this. This would be spooky, right? If the market really plummeted next week and hit the confluence of the overall large trend line, okay, right into that zone. That would be spooky. But you know what? That would be CCJ going down another $7 next week. That'd be another pretty heavy fall. But like I said, if you're going to get in at this sale price of the 2023 rally, you've got to be prepared to watch it go to the sale price from the COVID low and potentially even lower than that. Okay, that's the warning. However, like I keep saying, the market is definitely on sale right here and now. UEC, okay, this is one I used to like, but right now it's giving me the heebie-jeebies. But it is sitting right on the 61.8% retracement of the low from the start of, well, this is kind of more mid-2023. Okay, so yes, this is on serious sale right now, but with the same caveat, you've got to be prepared to wear it further. You've got to be prepared to wear it down. I mean, look at this. The point of control, maybe that's not exact. Maybe we just want to, I don't think that's going to shift the point of control at all. But the point of control on the volume sits right on top of that 61.8. Okay, so that a lot of that's got to do with the chop through here. But that's a marker that lines up. Got to be prepared if you want to buy it next week. Got to be prepared for it here, possibly here. Man, who knows? Maybe it goes to there. I don't know. Okay, that's your decision. But these are just some of the things I think you've got to be aware of in terms of your long-term positioning. URNM, okay, right in here on 61.8, and what have we got? We've got this old peak coming in, and we've got a slight divot here in the market profile. No market acceptance, okay. But word of warning, same thing, okay. Bring it out. What have we got now? The 50 here lays right on top of the point of control in terms of all the volume, okay. And we do have, you can sort of see it, right? So we can come down here. We've got a bit more volume that's probably tied into the rejection of these peaks. So again, if you want to buy it today, be prepared to wear it down, even through these lows. If you mentally prepare yourself to go, okay, I'm going to put my 100K in here at $40, and if it goes to 25, then I'm just going to have to fess up and say, yeah, well, I'm down that, but I believe in the story. Okay, because what you don't want to do is put your 100 grand in here and then watch it down here and then puke out. If you're going to do that, I would suggest don't buy it here, right here and now. If you don't care because you've got 100 grand laying around and you're happy to just watch it evaporate, well, why not? If you believe in that, you've got to believe in the story, right? But if you do, the market's on sale right now. It's in the zone. It's in the sale zone. NXE. Right on the 61.8. Now, looks like there's a little bit more wiggle room here. We've got no market acceptance below here until we run into these. Okay, so you can see the gap there, right? And then once we start getting in below here, then we start running into the point of control, which interestingly lays right on top of the 78.6. But this is the same thing again. You may want to be a little bit more tactical, okay, because look, the 50 lays right on top of the point of control of the volume. Okay, this is where the market did some business. So maybe it is better to wait for here, but that is up to you. That is a big pullback, okay, from the whole COVID rally. All right, so let me just fix this up a little bit so that volume profile is a little bit more accurate. It doesn't really shift. Okay, so that would be the kill zone again. But it's up to you. You've got to decide. You may not want to wait that long. And right now, yes, we're on sale. So that's pretty much it. We are sitting on medium-term points of value. And next week, not unlikely, we will see some longer-term points of value. So you need to decide what sort of investor you're going to be if you're in for the long haul and how much drawdown you're prepared to wear. Also consider the upside. What does a successful trade look like for you in this space, and how and when are you going to exit the trade? So don't get in over your head. Don't get too flustered by market movements. I think there's going to be some volatility next week, so don't get too excited if it goes up. Don't get too depressed if it goes down. That's all part of the game. So thanks for watching, and we'll see you next time. Bye for now.